two fine gentlemen. Firstly, my co-creator, co-host, Chris, aka Charisma. How you doing, man?
Great, great. How are
Yeah,
you guys? Glad to be here.
glad to glad to do this with you. And we also have our first special guest, not so fast. What's going on, man? First time we got you on this.
Hey, thanks for the warm welcome. I'm really glad to be here talking with you guys.
Thanks, dude. I've been working on that intro all morning, so I'm happy it worked out. Right now, we were supposed to have Alex from IDEX on the show. However, apparently they're having some internet connection issues. So if he does manage to hop in, it'll probably be midway through the podcast. If not, we'll be blessed by not so fast presence, and we'll try to get as much information to you guys. Today's episode is all about DEXs, so decentralized exchanges. Personally, I don't know that much about it, so I'm gonna ask you guys whenever we ask questions if you can try to keep it as basic as possible, because I think that I think there could be a lot of good value to be extracted, and sometimes it feels a bit too complicated, if you know what I mean. And yeah, so I'd like to get it from that angle. So I guess first question, what exactly is a DEX? if you had to break it down.
Sure. Okay. So a lot of the info that I'm going to be pulling is from an article, and I can give you a link later. But it was written by one of the creators of a DEX, as kind of one of their official blog posts that goes into depth about it. But I'm sort of going to be simplifying it. So obviously, being into crypto, you know the difference between something being decentralized, right?
Hmm.
Centralized means that one kind of party has ownership or control, and decentralized means that everybody has roughly equal ownership or control of what's going on. So a DEX is just an exchange where the people participating in the exchange are in charge of their own aspects of it. And there's four sort of pieces to an asset exchange. There's capital deposits. So with a centralized exchange or a CEX, one party holds the capital deposits, whereas on a DEX you would hold your own. There's order broadcasting. So who chooses, or who's with a DEX, your own local client would show that you're bidding or offering something. There's order matching, which is the whole big deal of who hosts the order book. It's pretty there's a lot of information that changes really quickly. So does one centralized entity hold that information and process it and display it to you, or is it somehow done by everybody participating in the exchange together? And the final one is execution. Who's running the engine or the platform that actually executes the trades, one thing for another thing? And in a DEX, that is done generally by atomic swaps, and the other way to do it is on a platform of federated hosting nodes. So yeah, that's the main four things. And there are some things out there that call themselves a DEX, and maybe they are, but there's more of a spectrum between centralized exchange and decentralized exchange. It's not just kind of like one or the other. It's not just like one true DEX. So it's a combination of how well you do each of those four things. The better you do each one of them, the more of a true DEX you are, the more insight.
Fair
Does
enough.
that make sense? Is there anything to expand on there?
Yeah, so I guess out of those four, in ranking order, what's the most complicated to to do successfully? Is it the order books? Is it finding liquidity? Is it the where the money's being held? How does that all fit in?
Okay, probably that's a super good question. And because I haven't worked on code for a DEX, I'm not 100% sure. I would imagine that it's the order book, and just because it's a lot that changes really quickly. Like, I don't know if you've ever looked at a market stockable too, where you see all like different marketplaces, and people are using like HFT to post and cancel bids in microseconds, milliseconds, or whatever. And so it can be a lot of information to stream to a lot of different peers. So if that's being relied on by like everybody's own personal computer to process and share out all that stuff, it can't really, that information can't really flow as quickly in a DEX as it can from a centralized exchange. So that's probably one of the hardest things to get right, is reliable peer-to-peer order books, so that everybody's
happy.
The same information is shared out equally, distributed properly.
Yeah, I guess
no good sense of having like one person see one price, and it's way like 5 minutes later than they thought.
Yeah,
that enables front running and stuff, right?
That's a good point. Charisma, do you want to add anything to that?
Actually, the subject is done pretty well, not so fast. Congratulations on this one.
Oh, thank you. I take your congratulations with pride.
Thanks, dude. But in terms of liquidity, I absolutely agree with you. And something that popped in my head randomly is Ren protocol. I'm sure you've heard of Ren.
I have, yeah.
What role do they play in this entire picture? Do they play a role? Firstly, I guess that's the first question.
Yeah, that's Republic, right? And
yeah, exactly. Dark pools.
They're doing some kind of like fiat or stable coin decentralized swap with that, and that is definitely integratable into a DEX system or a centralized exchange system. But Chris, you might know a little bit more about that, because I only know like a few.
Actually, they are doing cross chains with atomic swaps, as you mentioned before.
Oh, they are. Okay, cool.
1 second. That's Republic protocol, right?
Yeah, they're doing dark pools, and from what and again, as I said, this isn't my real expertise. So, from what I understand, is their objective is to create liquidity for decentralized exchanges using anonymous swaps or whatnot. Now, if I'm very wrong, you guys in chat can yell at me.
Well, that sounds valid, because like one of the problems, I'm sure we'll get to this after we've done a little more groundwork, but one of the problems is getting liquidity on decentralized exchanges comparative and competitively to centralized exchanges. And that's a whole, I've got some ideas about that, but I'm sure we'll get to that.
Okay. Like, I guess next question for me, at the moment, 2019, November 13th, are there any real, true decentralized exchanges? Because a lot of exchanges label themselves as decentralized, yet their order books are centralized, or there's some component of it that is centralized. Am I correct in thinking this?
Yeah, you are correct. So like I said, there's a spectrum, and there's quite a few at the very close to true DEX end of the spectrum. There's two that stand out in my mind, and one of them is, it used to be called BitSquare, but now it's called BISQ, B-I-S-Q.
I've heard of them.
They're a protocol that's completely decentralized. Everything runs on clients' nodes, order books, matching, execution, everything.
Interesting.
And then the other one is the Blocknet, and the Blocknet is arguably slightly less decentralized than BitSquare. And that's only because of a meta issue. Everything with their protocol is all done by atomic swaps and stuff. But what's arguably centralized with them is that they hosted funding via an ICO in 2014. And so their team still holds and controls a bunch of the Blocknet nodes. Probably not a majority at this point. And if the team were all to quit tomorrow,
GG.
the entire Blocknet would still run. Well, I quit, or you could say something worse, right? Because you know how regulators regulate things. The entire Blocknet would still run, but they are slightly less decentralized than BitSquare for that reason. And then there are other ones right at the top of that spectrum, like Komodo's platform is very decentralized. They just have a few extra software things that are slightly permissioned to the main team, whereas Blocknet, like, you can straight up start using it regardless of anything. You can list anything on there without anyone's permission. Whereas with Komodo, you have to add a little bit of code, and I keep getting corrected about exactly what the difference is by the Komodo team, because it is so minute, but it can't be completely hand waved away. It might not make a functional difference in the long run. And then you've got stuff like, and I hope I'm doing everyone at IDEX justice and all the Ethereum-based platforms. They're pretty well decentralized because it's all running off the same contract. Where the sort of weirdness comes in with Ethereum is that it takes a lot of juice to run an Ethereum node. So running your own node ensures that you're participating in a DEX. You can do it easily with Blocknet, your own wallets, but with stuff like IDEX, you're usually using something like MetaMask or a client that borrows node information from someone else. And most of the time, that someone else is the Infura platform. That platform is like, we'll host Ethereum nodes for you so you can build off all that stuff. And Infura is owned by Consensus, which is Joe Lubin and all his many dozens of companies, but Infura is one of them. So that is a pretty big point of contention about deciding whether IDEX is decentralized. Because, like, yeah, it is, but you are still using, like, interacting with smart contracts to use their DEX. That most of the nodes are run by Infura, right? There's very few people that are actually running their own Ethereum nodes. I gave up on mine a couple of years ago. It was just hogging too many resources, and I need a server grade machine and a whole extra dedicated connection to do it. And finally, there's the one that you guys might also know, BitShares, which regardless of its origins, is actually a pretty cool version of a decentralized exchange, because instead of a lot of different nodes of anybody participating, there's sort of like these a federation of nodes. So those are pretty centralized, but the kind of game theory is done so that their best interests are to cooperate and not screw over their users.
Like Bitcoin, kind of?
Yeah, exactly like Bitcoin. So it still works out that it's fairly well decentralized, but it's not as decentralized as the other stuff. And then below that, there's some stuff that's based on Ethereum, similar to IDEX, but much less decentralized.
Hey,
I
welcome to
couldn't
Bagsy
tell you
TV.
exactly what the Binance DEX, how it's decentralized. I believe they run off their own similar platform on the Binance chain, but you got to know how centralized of a currency BNB is.
Yeah.
And you got to know that, like, all the tokens that are on there by permission. Like, you can't just go list whatever you want on Binance DEX or whatever.
Yeah,
and
maybe
maybe just non-custodial.
Exactly. With this one, I may interrupt for a sec. Actually, all nodes, officially saying, of course, they are decentralized and stuff like that, like with any other substance within the space we are seeing. But in fact, what's going on is majority of those nodes, or even all of them, are owned by, well, subsidiaries of Binance themselves. But you can just, and of course, that's just a speculation. I'm not stating that's a fact.
So if that were the case, then it would be very disingenuous to call Binance DEX a DEX at all.
Another thing that I may call not a speculative but essentially a fact is you need to get approval. As you said before, you can just go to Binance DEX and list whatever you want. There is some mechanism that is that is called like a community vote or of sorts, whether the people somehow, we are not sure how, decide who should get listed and who should not. And of course, after a few steps, whether you like it or not, it's nodes that are deciding who should get listed and who should not get listed. So
Mhm.
either way, whether it's called community voting, we are at the end of the day, we have those nodes that are deciding. So yeah, is Binance DEX decentralized? It is not, I would say, but
It looks like it isn't.
Mhm.
yeah, but for now it's probably the best mix of both worlds. But I would not call this one a decentralized exchange.
Okay. So with that being said, let's put a scenario together. Uh, let's say a U.S. regulator wanted to screw over Binance and let's say take their domain or whatnot from them. Could they do that to the DEX?
That's a good question.
Like, would it be harder
From
than
the
than
just
a
bank
cent?
point of view, they could not because whole whatever agenda we have with Binance DEX behind, we when you're looking at any kind of stuff, any company through the eyes of SEC, for example, you gotta state the facts and some proofs, right? With Binance DEX, all we have is the technology they are stating, which is provided via the centralized mechanisms, and those, however they work, which is obviously not some major field of any SEC employee, I guess. Well, however, they do have some OPSEC people that are pretty familiar with any IT stuff, but let's just keep it that way. What I'm trying to say is they could not prove that some US citizen came to Binance DEX and used it because what is going on when you are going to Binance DEX is you have your own wallet, right? And hold on, I have some. Can you hear me?
Yeah.
Yeah.
Great. When you are coming to Binance DEX, think of it like, and sorry to anyone that may feel offended, but think of it like going into any torrent website, right? You gotta, if you want to do something, you're doing on your own. You gotta download the torrent client and stuff like that. And the same is going on with Binance DEX. You gotta create a Binance account, which is obviously tangled only to this service within the Binance DEX. So this way you are responsible for your own moves there. So it's not like the fault of the company that you are using it. And in this case, it might be only your own fault, whether you will like it or you will probably will get harmed somehow. So biggest negative of the whole situation is, let's assume you are US citizen and somehow, that's as I said, speculation. I'm not stating anything bad about them. And you will somehow get, I don't know, hacked, or perhaps you will lose your coins on Binance DEX somehow. Let's not go deeper with this. You can't do anything about it, and you can just simply go to the police because as they state, it's a DEX, right? But on the other hand, they could reverse whole transactions on the blockchain they are having, because yeah, as I mentioned before, they do have their own nodes which are possessed by them. So you know what I'm saying right now? They are
I think
in control
so, yeah.
totally.
Yeah, they have a lot of control just because they haven't exercised it yet, and they've pushed a certain marketing angle.
Exactly.
Doesn't
And
mean
another
that
thing
it'll
of
turn out that way in practice.
yeah. So either way, with the regulations here, it's pretty difficult to state whether it's the fault of the company, which is behind the technology, or whether the user is responsible for the whole situation. And most of the cases will go directly at the user's fault, whether it's on his side or not.
Yeah,
That's right. Yeah, I think most countries have laws that say it's not the platform or service or software provider's fault for how a user chooses to use that stuff. Like, you don't go after the hardware store for somebody who bought a hammer and used it to hit people, right?
It's like,
That's
screw
sort of
you,
the
Home
same sort of
Depot.
thing.
I'm suing you.
Yeah, like, just because they have the money and sell the hammers doesn't mean it's their fault. You know? Yeah. But there are people that would take issue with that statement, I think, too.
Actually, that kind of brings up a question for me. I'm also of the opinion that it's of the responsibility on the user. Um, it, it.
Traders would have a problem. Yeah.
Oh, sorry. I think the connection got screwy for a sec. Go ahead, man. Yes.
I'm good. I'm good.
Yeah, sorry, the connection's a bit screwy. We'll give it like 20, 30 seconds.
It seems like a bit wonky, maybe on your end.
Yeah, I think we're good now. Sorry about that, man. It's my potato processor.
All good, all good.
Yeah. So, yeah, sorry. As I was saying, like, is it as easy to hack someone's account on a centralized exchange versus decentralized? Do you think that, you having to generate a file to store your keys, do you think it's easier in that sense for a DEX or the other counterpart? Or the same?
Interesting question, definitely. So, a sex is a more valuable target for a hack, obviously, because it contains custodianship of everybody's stuff. So, that right there is a reason alone for hackers to target a centralized exchange. Be that as it may, though, they also have like a legal fiduciary responsibility to do a better job of protecting those assets, the best possible job, really. Whereas individual users of a DEX, they don't have any kind of minimum responsibility. They can be as dumb as they want with the passwords, the private keys. They can not use a VPN. They can use like passwords of 1, 2, 3, 4, 5. They cannot password protect their wallets that they use to connect to a DEX. They can like reuse Bitcoin addresses. They can talk with their real name on Twitter about how much they use Bitcoin. They can post screenshots of stuff. There's lots of ways that people make it really easy to be targeted by displaying that they're easy
By
targets.
the way, to which school you guys have attended as a kid? I'm just asking for a friend,
Yeah, it was actually named after my mother's maiden name and my first pet's name and my.
Yeah, go on.
Yeah. But it's that kind of thing, right? Like sometimes people just using or doing stuff on their own that's insecure will make themselves easier targets than a honeypot of an exchange.
Whether it's a DEX or SEX,
it's all the same.
The most probability of a mistake comes to one factor, which is a human in both cases. Both of those can be done with a phishing attempt of sorts, which is like those. I'm not sure if you remember those, but there was some kind of I don't know prank or scam attempt with some African prince or something like that. I'm not sure if you remember those guys. It's not crypto case, of course. Like you could get an email with someone that will ask you for money because he can do some kind of a bank transfer and he needs some smaller amount of money to do that transfer to you, so you could become a millionaire and stuff like that. So short story telling that's some sort of scam of phishing attempt that includes some kind of URL which redirects you to some kind of website which would try to get your data, your passwords and stuff like that. So basically in both of those cases you will be pretty screwed, because in some of the phishing attempts you will get a keylogger to your computer, so God forbid anything would happen when you get a keylogger on your computer. Either way, the main difference between both of those SECs and DEX, by the definition, we should be more secured on DEX as long as we are smart with what we are doing ourselves, because there we do have our own keys, our own wallet connected to other wallets within the network of the decentralized exchange. And with the SEX, thing is, yeah, it's one big honeypot, as also already mentioned. And here I would like to give you examples. We had a Binance hack, and exchange proved that they can defend themselves not by the technology they are having. I'm not sure whether it's a good or not technology, because I didn't got any kind of opportunity to look into their code and mechanism. But either way, after they had some kind of event, they were stolen crypto of about valuation of $10 million from users, apparently.
Allegedly.
They covered whole losses for users, so they would not be harmed anyhow. So yeah, SEX for the win in that one situation. And another was Ether Delta, if I'm not mistaken, when they were just hacked, and somehow everybody's funds got to the toilet, let's say. I'm not sure because I don't remember much of the details, but I'm pretty sure it was Ether Delta when something bad happened to people. But on the other hand, we also had Cryptopia, which was a SEX, and they've got hacked, and yeah, right now they're not with us anymore. And this money also is not with us anymore. So
yeah,
we have three cases here. One is DEX, and it was bad, obviously. One SEX, which was for the win, and the last one also lose. So probably the best security for any kind of exchange is a big pile of money, I guess.
Well, that's interesting that you make those three comparisons. I don't remember what happened with Ether Delta exactly, but I think it was an exploit in the smart contract.
Something happened. Yeah.
That made it possible for people to be looting, and that's an accusation that people have throughout everything built on Ethereum, is that there are always people looking to create an exploit that pays them, and if code is law, as people always said, then that's legal to do as long as you can make the code do something. Then by definition it was designed to do it that way. And I'm thinking, of course, of the DAO hack in 2016, where somebody made a recursive DAO split contract that basically just split in the DAO's funds into tinier and tinier pieces, and voting to do it again and again and again, and creating like a recursion thing that just dumped all the DAO into their own account, and all the Ethereum was locked up into their own account. And so that's why we have Ethereum and Ethereum Classic, is because Ethereum Classic is the fork where the DAO attacker kept all their funds and adhered to code is law and the immutability. And Ethereum, the one that is popular and hosted all the ICOs of the boom that we saw a couple years back, that's the one that's permissioned, where they decided to roll back the attacker's damage and give everybody their refund. So it's really interesting how that particular one shook out and then set the stage for people to do it various different ways. So by a coordinated centralized action, Binance, even though they were hacked, decided to eat the loss. That doesn't make it any different for their users, because they could potentially be hacked for a loss that they can't cover on their own. And then, and only then, their users would bear the brunt of funds not being actually safe.
Not safe.
Whereas Cryptopia is fully centralized, and they that's a whole other can of worms I don't really want to get into. But
me neither.
Definitely, they got hacked, and their most valuable currencies looted, and then it forced the shutdown of the entire exchange, basically directly and indirectly.
Man, that was a good summary. I'm kind of salty about Cryptopia myself.
Me too, man. I love that place. I love the founders, and it just
I may or may not have had some funds on there when it all went down. So,
Yeah.
and that's actually the next question. Really straightforward one. We hear the saying "not your keys, not your coin" a lot. Can you dive into the meaning and significance of owning your own crypto?
Yeah, for sure. So let's go into why we think crypto is valuable and why we speculate in it and why we want to hold on to it for gains that outpace regular markets and all the other stuff.
Mm-hmm.
So part of why crypto has that value is because it's different than other assets. It's what you could call a bearer asset in many ways, where whoever's holding it in their hands, that's who it belongs to. But because it's based on cryptography, and cryptography is also pairs of keys, public and private key pairs. So your cryptographic, like receiving addresses, those are derived from your public key. And you have a corresponding private key, which theoretically only you know. And by doing an interaction of your private key with a public key, it allows you to securely send and receive funds on your own. So you have to protect your private key in order for that system to have value independently of centralized entities like governments and states and banks and federal reserves and all that stuff. So that's why crypto's like asymmetric and kind of different from all the other assets that are around it, because it's controlled by your ability to keep your private key secret, whereas the value of other stuff like land is based on location and farmability, and like stocks are based on business practices and economic environments and all that stuff, right? There's speculative aspects to all of those things, so we're taking them out and they're all sort of being treated as equal and a non-factor in this. So the bottom line of Bitcoins and all of crypto's value is that it is independently controllable. So when you're allowing another party, like an exchange, to hold your coins, or a hosted wallet like Coinbase to hold your coins, you're basically long-term giving up exactly what makes crypto valuable. And on your own, that might not have much of an effect. But if everybody starts doing it because it's easier and more convenient, then all of a sudden, the thing that makes it valuable kind of goes away in the grander scheme of things.
Mm-hmm.
And what you end up with might not look a whole lot different from what we had before Bitcoin was ever created. And definitely at that juncture, number won't go up. We won't be able to protect ourselves against the capriciousness of the existing system, the spirit in which Bitcoin was created to sort of fight against, right?
Mm-hmm.
So it's partly a philosophical sort of libertarian type reason to keep control of your own money, but it's also a long-term practical thing too. I'm not saying that you have to be militant about it. There are
Mm-hmm.
advantages to having your coins on exchanges and in other people's custody in certain times, but it should be kind of a decision in the front of your mind, like, oh, I'm not going to keep these coins off these exchanges unless I'm actively trading them. I'm going to use leverage not to go full 150x, full degen on certain plays, but to reduce the amount of coins I got to keep on an exchange in order to make the trades at the size that I'm comfortable with in my trading plan. Keep more of it off exchanges in areas where I control, so that I'm safe from hacks and everything. Take my profits off exchanges, reload only a tiny amount if I wreck myself. That type of thing. Responsible use, minimizing exposure to third-party risk or counterparty risk is what crypto is all about, and how it integrates with the sort of existing systems.
That was beautiful. I don't think I've ever heard anyone break it down that well. Seriously, no, I appreciate that. I don't have anything to add. Chris, you got anything?
I'm glad to do it, man. I'm glad to do it.
Damn, I'm gonna really rewatch this after. Take notes.
Try to compete with that.
I know. It's impossible.
Wow, you guys are so nice to me. So nice to me.
No, man, but it's nice to find someone knowledgeable, That's the thing. But that's
Yeah, no, I'm glad to. Well, it doesn't always get explained easily on Twitter either, right? And that's where most of the discussion starts happening.
Yeah. Yeah, absolutely. And I like what you said about reducing counterparty risk and using leverage not to increase risk, but to put less money on the actual exchange. Like, not enough people see it that way, and to me, that's the absolute truth of it. And that's how I operate as well.
Yeah,
So
you're directly involved with that, right? So
absolutely, yeah.
that type of thing. I mean, it's a lesson that a lot of people could take, I'm sure, just to maybe think about reducing their exposure to that, or even knowing that it exists in the first place.
Yeah, let's take a question from the audience actually. Let's see here. What are your thoughts on staking on an exchange? And I guess the question was thoughts on staking and them holding your stuff. I mean, I think we already covered the holding your stuff part, but do you find staking as a kind of deceptive method to have people keep their shit on there, or you know what I mean?
Yeah, I don't know. Like, it kind of depends. It's pretty cool of some exchanges to stake for you and provide a service that way. But and there's a lot of different types of staking, but the traditional kind is where, you know, your own holdings actually run transactions on the blockchain. So you're mining by allowing your node to communicate with all the other staking nodes. And so it's nice to not have to deal with it and deal with one login for and password for an exchange rather than your own particular wallet hosted on a computer that may not always be on, etc. The problem with staking on most exchanges is that you have to have those funds in a hot wallet. And by hot, I mean connected 24/7 at all times. So no matter how many you able to theft and hack, but all centralized exchanges very strict protocol, being most of clients' funds in cold wallets. And only keeping amount. So staking for you, but you could be doing that yourself and not be a massive honeypot like an exchange would be. Now, there are certain other types of staking coins that, you know, they have a different technology from sort of the baseline type of staking coin where you do it from your own wallet. And there's so many of them, like, I don't really know a whole lot about them. But the bottom line is, if you can stake your coins in your own wallet on an old cheap-ass laptop and you have a VPN on that and you know how to use a free virtual machine to run the wallet in, just do it yourself. Stake yourself. You get the same roughly amount of rewards and you won't have that counterparty risk to the exchange. So that would be my advice. It's just anything you can learn to do yourself, and staking is probably one of the easiest ones. Just do it.
Thank you. So yeah, so I agree with you. I mean, I'm actually curious how many of the audience do staking on an old laptop using a virtual machine and a VPN. I wonder what percentage of crypto users actually go through that type of path. I'd say it's probably like under 10%. What do you think of that?
Maybe. Originally, like when I got involved, everybody was doing it on their own. Like nobody wanted to throw real money at virtual coins. They would want to just go get a GPU they could sell to a gamer later and do mining. And like nowadays, people are like, oh, I don't want to mess around with computer guts. I'm not a nerd. I want to trade. I want to sling coins and make Lambo.
Make big money. Yeah, exactly.
Yeah. So yeah, the sort of grounds for getting involved have totally taken a shift away from sort of production and hands-on involvement to I don't want to say consumerist, but it's just an expected thing that the easiest way to get involved is to buy in. And that's probably a factor of like stuff becoming more mainstream and acceptable. So I'm not going to complain about that at all, but I am a little bit sad for the loss of the days where you got involved by from all possible angles. So you mined and you traded and you bought and you learned about the tech and you learned how to read a block explorer and all that stuff. Now you don't really have to do that, but it's better if you can. But like I said, nobody's making you do any of those things or understand any of those things.
Beautiful. Hey, Chris, you want to add something to that?
um, with the staking part, perhaps what I can actually add is not to the part of the
The how?
keeping those coins safe and stuff like this, but instead just I hope people learned the lesson years ago, but it's never the case. So let me just repeat that. Do not fall for a magic feature called staking, because most of the time it's just a mechanism for developers to dump their own coins onto you, because remember, the bigger the node, the bigger the generated amount of tokens or coins per cycle is. So actually we have some of those right now within the space.
Hey you, welcome to Bagsy
Some
TV.
of them are quite public with their statements and mechanisms. Others are not. Well, let's just think about how Neo and their VC have quite big amounts, or had, because that might not be the case right now, the amounts of Neo that could allow them to generate bigger amounts of gas. That's quite the greatest example I have here right now. So just stop for a moment and think about it, and think whether it's worth it to stake some tokens or coins, or just trade them actively, because what matters at the end of the day is your final value of bitcoins or fiat, depending how you trade.
It's like, can you afford rent? I think that's like the number one thing. But that's a good point you make, Chris. And I guess one thing I'd like to add, this year there were, I think, and correct me if I'm wrong, I think there were maybe 3 or 4 mainstream projects that outperformed Bitcoin. There are probably a few more that I haven't heard of that are like low liquidity, but had you been staking, let's say, Neo or any of these projects, right now you're probably looking at a deficit of over 85%. So it's a really good point you bring up, Charisma. Like, don't fall for that, 10%, 15%, quote unquote bonus. I mean, you are helping the network. So I think staking might come in handy if you're truly in it for the long haul and you believe that project is going to be worth something in 4 or 5 years, and you're not a trader. Then I'd say maybe staking is something smart, because you making less actions is probably better than you not knowing what you're doing. And if the overall project is worth something in 4 or 5 years, then that 10% annually will accrue. So I think the odds of someone picking a project like that are slim to none. But if you are able to, then power to you and stake away, my friend. Does that make sense? Not so fast, or am I talking?
Yeah, no, it's totally right on. And I think it's viewed a little bit through the lens of the 2017 frenzy and the losses incurred from everything that sort of came out around then, or got bought into by a lot of people around then, and where we're at right now. So like, I've definitely held some staking coins at negative 99% from where they were at the top. But if there was something that I held that long, I probably got it before then on the run up, and just I have some left over only because it's a moonbagger, because I was stupid and didn't sell enough during the run up. So there's 2 edges to that, and it remains to be seen whether the whole sphere of altcoins and staking stuff will have another astronomic cycle. There are people that argue that because it's permissionless, like, it absolutely will. There are people that argue that no, that's all done. It's clear that Bitcoin and a few other ones are going to be king, and everything else is mostly a scam or an ill-fated project, because all the sort of focus gets attracted to the hits and leaves everyone else out in the cold. So it's pretty interesting to kick around the idea. Not sure how it's going to play out, to be honest. I know my bets are on sort of the multi-coin future, but
what does that mean?
I'd be dumb if I didn't also just have Bitcoin as well. It means that I think
Altcoins.
I think like any cryptocurrency that's not Bitcoin or Ethereum or the ones that we know very well, I think they also have a chance of surviving long term in their own niches, and maybe bigger than niches. You could call some of them like venture coins that have a certain specific project. You could call them service coins. The one that I mentioned before was the block network. They have a pretty well decentralized exchange and an incentive for holding and using it. There's so many more out there, and I imagine that because it's permissionless to speculate in the way that it's permissionless to download a torrent, the only reason that people aren't going to do that is because it's less convenient for them to just get the big stuff. And while I am a full-on supporter of Bitcoin, I'm still quite convinced that all this other stuff is not going to die off anytime soon. Some of it is, lots of it is, but as a field in general, all other stuff other than Bitcoin and Ethereum and the big hits is always going to be around.
Thanks for that. I appreciate that, and that gives me hope. I have a few bags here and there, so hopefully one day they'll see the light of day. But just to keep it on the
hope so.
Yeah, just to keep it on the topic of DEXs, though, Chris, do you have any questions from earlier that our Twitter fans wrote on your post? Do you have any of those pulled up?
On.
Cool. We'll go through like 1, 2 of those, and then we'll wrap it up.
Sure.
Are you good with that? Not so fast.
Yeah, man. Yeah.
Cool.
If the DEX has a KYC process, is it really a DEX? That's the one. That's the first one.
Fuck no.
No, that's not. That's not. And I think maybe the context of that might be CryptoBridge, of which I was a really big supporter.
Yes.
In the early times, really big supporter, because I thought what they were doing was good. I thought, okay, they're taking an incremental baby step away from centralized exchanges and building something that's incentivized on a gateway, which they control that one node, that gateway node. But once they finish building it out, they'll allow other parties to clone the node, and then it sort of joins the federation. Where that all went wrong is, my understanding, sort of bad bet on where to centralize the current operations before spinning it out into decentralization across a bunch of other nodes. And the regulators came for them, and they had no choice. I'm sure the founders regretted doing it, but I believe they were stuck with a choice to require people's other documentation in order to continue accessing CryptoBridge, the gateway. The interesting thing about that is that you can still access everything on CryptoBridge through other gateways on BitShares. So it's like
secret doors.
Oh yeah, well they're not even so secret. It's just you gotta know that how the system functions and how it exists. But yeah, if bottom line, you should not have to give anybody your documentation in order to use a decentralized exchange. Maybe the only kind of difference against that would be if you're meeting somebody in person on a BitSquare or HODL in-person fiat to Bitcoin exchange. Unless you go in a mask like you're wearing, they're going to know some stuff about you, right? They might see the license plate of the car you pulled up in, or see where you get on the subway or whatever. Like there's always some kind of docs that's leaked in situations like that. But for the most part, it's not a DEX if you have to KYC yourself.
Okay. Is there anything else that is interesting? Let's see.
Let me see here. Hey, you're welcome, Modern Testament. Hey, what's up, D-Boss? How you doing? Yeah, Cardano just released their testnet for staking services. What's Cardano valuated at right now? Like 500 million or some shit?
Yeah, it's pretty big. It's more valuable than the places I like to play in.
Yeah, no, same here. And I guess just adding staking in general will increase inflation in some way. So
who
that's
is
not good.
most handsome crypto influencer on crypto Twitter? No,
Great
I'm
question.
cheating with you. There is no such question, obviously, but yeah, there is. That's it. That's it.
Oh, I was gonna go through my list.
Honestly, Messiah's up there. He's a good-looking chap.
He's a dashing debonair lad, that Messiah.
Yeah. Nice question, Chris. That's really great. Hey, what's up, Jackson? Okay, someone has a question. Moonvillain. Now that we brought up KYC and exchanges, it was rumored that some U.S. users who got caught had to provide KYC to withdraw. Wondering if using a VPN and trading larger amount of money would raise suspicion and lock U.S. users. I think you're talking about Binance. I remember Sakura, he's a trader, and at some point, Binance required him to upload KYC because his IP address was different than the one he had used before. So something like that. I don't know much about the VPN thing. Can you fill me in not so fast?
Maybe, I'm not sure of the situation, but maybe to protect themselves and their own reputation. That's a tricky situation if you're providing services of a DEX that's not really a DEX, and some highly capitalized big swanger is suddenly logging in from a different IP address. I mean, it could just be the person's VPN, but you're always going to want to err on the side of caution. And, you know, the problem is that uploading a selfie holding a passport is considered acceptable when really it should be the last thing that anybody ever does. Just give some business like your documentation like that. But they're only covering their own asses. So, you know, if you're using a DEX, you don't have to do that. The responsibility is already 100% with you. And you won't ever have to be forced to do that.
In that case, I have one more question.
Yeah.
Are you? Let me rephrase. Do you think once there is a decentralized, maybe like you said, BISC is one of them, but would there be value and would there be a possibility to invest in one? Or would having a centralized exchange token ruin the DEX itself, so there shouldn't be a token to invest in?
I think there's a lot of strong cases for an exchange having an incentivized token. So like CryptoBridge, I thought was a great incentive.
Yeah, BCO.
Blocknet, like if you hold a Blocknet service node, you earn fees in the traded coins plus fees in that token. So there are incentives out there. It's just a matter of attracting enough volume. But there is a way that that's going to happen. And I think kind of communicating that to traders is an important thing in terms of minimizing your overall risk profile. So that's one way you can do it, is by branching into some more long-term position management on exchanges like DEXs that have somewhat lower liquidity, but if you know you want to buy at a certain position or a certain price, you can just leave out orders, and that's you being liquidity for the long term on a DEX. So if you sort of shift over time your long-term position trading to placing orders on DEXs, you're not incurring any centralized exchange risk or counterparty risk while you're doing that. And over time, the more people that end up doing that in aggregate attract more volume to DEXs, which means that eventually they become more attractive places for shorter term trading to happen, which means more volume, which means if you're holding those incentivized tokens, you also stand to gain from that part of it. But it's going to take a lot of time, and we're still not completely fed up with the regulatory overreach. We're mostly, I say, as like a society and as an industry now, which we've been for about 3 years, the industry is totally fine with putting on a suit and doing everything legally. That is a fantastic way to do business. And in fact, it is the way most business is done and has been done. But it's not the way crypto started out. And I have a feeling that the pendulum's going to swing the other way. People will get sick of it. There's different countries all over the world that have different sets of regulations, and we'll see an advantage into allowing full-on use of crypto, no regulation, no holds barred. And I think that those countries or regulation jurisdictions will see a very immediate benefit that then other people will start to imitate. And I think pretty soon we'll realize, and the transition will be fairly quick, that it's much better to be a sovereign individual trading your own sovereign assets if you need to on DEXs.
Not so fast. Thank you so much for coming on our podcast, man.
Man, thanks for having me. Thanks for listening to me.
Of course, dude. And like the whole purpose of
it was a pleasure, man.
Really,
pleasure of mine. Pleasure is mine.
Really was. And the whole purpose of this podcast that Charisma and I created was just to really dispel the truth on important topics. So if anyone at home has some things, topics, anything that you believe we could add some value to, just, hit my DMs, message Charisma, and we'll do our best to make it happen. So everyone at home, have a great day. Not so fast. Charisma, I appreciate you both. And I will talk to you guys later.
Thanks.
My pleasure, guys.